guys. Here we go again with another of our Evolution Consulting market updates as they have come to be known. And as you can tell already, this one is a smoking flight, guys. Yikes so far to this week of trading. This market update is being recorded on the 15th of September. It's about 4:30. Market's closed. And what we've seen today was something we sort of forecasted, though we're not going to say we did so directly, in switch and signal. Okay, but we are talking serious volatility this week. As a matter of fact, it's been like the only mainstream story going at this point is the story of just how volatile and how a little bit ridiculous the markets have gotten. But that's okay. Specifically, though, interesting phenomenon today. One of the reasons that we wanted to do this market update and get it out so quickly is it has everything to do with something very odd that we've seen today, which is effectively the decoupling of the two Direxion ETFs that we like to talk about so much, JNUG and NUGT, which again, we encourage those trading those. Like I said, if you guys have emotion, okay, or excessive amounts of it, if you have emotion or if you are easily rattled, this market will run you through a fucking ham slicer. I don't know how to put that any other way, guys, especially on the triple leverage stuff, especially on something as geopolitically, not as much anymore, certainly not nearly as much, but something as geopolitically manipulated as gold and silver, okay? If you have emotion or if you have self-doubt or if you have excessive amounts of irrationality, as I like to call it, emotion, okay, stay far away, because this market, never mind the triple leverage ETFs, the fact that they're based on metals, but this market will literally run you fucking headfirst through a ham slicer, okay? There's just no two ways about it. It is not a forgiving market. It's not a kind market. It doesn't love you. It's not your mother. It's not your brother. It's not your father, okay? So as long as we've gotten that portion of the warning out of the way, guys, we take a look at what happened with JNUG and NUGT today. And that is, we have gold down more than $8. Okay, spot price of gold down at $8, and we have JNUG up 2%. What? All right, aren't those supposed to trade on, at least theoretically, aren't they supposed to trade on a spot valuation? Same for NUGT. NUGT was up a little less than 1% today. After, at the close of the market, it looks like 0.92. So what happened? Okay, and what happened is a phenomenon that I've spoken with a couple of our customers about, or a couple of our clients about, that I chat with on our messaging platform, okay, but really haven't written much about in Switch and Signal or Wirehouse for that matter, though that's going to change in October. We're going to do a piece on that, and that, guys, is the speculative effect on metals. Okay, we have an FOMC meeting coming up. We're coming up on a lot of the BOJ talking about going deeper into negative interest rates, whatever the hell that means. But we have a lot of these catalysts, guys, that we've been talking about and that we've been encouraging. You have to wait for it. We don't encourage you to be patient. Okay, you don't have to be patient, but when you understand what the big picture plays, you understand that there's certain time frames that are going to have to play. There's certain things that are going to happen. It's not if, it's when. Okay, and understanding that is sometimes you have to wait for the when a little bit, and that's okay. But the point of the story, though, guys, is we see a lot of these catalyst events that we've been talking about, the kind of stuff that moves gold 20, 30, 40, 50 bucks in a day. Okay, the kind of stuff that could move silver theoretically $1 and change in a day, $2 and change in a day. Okay, a lot of those major catalysts where it becomes evident that a lot of the stuff that we talk about, and credit where it's due, a lot of the stuff that the alt-right guys talk about, it's not if, guys, it's when, and it's not theory, it's an inevitability is really what it is, okay, at least at the economics level. So the point of the story, though, guys, is we've seen, again, a 2% update for JNUG, triple leverage Direxion ETF, on an $8 down day for gold. Why? That's speculation. That's money getting in those equities way ahead of catalyst events. You don't suppose that they might know something that most of the world doesn't. It couldn't be, right? The fact is that they do, okay? And they're getting in those ETFs at current levels, sub $20 levels, after the reverse split on the two Direxion offerings. They're getting in way ahead of everybody else speculating, so that when the spot price does move the $20, $30, $40 in a day, guess what? They caught the pre-speculation, they caught the effect of the run up in the spot price, and then they get another bonus, which is the after effect okay, of everybody going, holy shit, gold moved $40, $50 in a day. Holy hell, how did that happen? I want in too. And then, everybody piles in afterwards. So they're getting all three of those upside catalyst moves. All right, and if you don't think some of the folks that can move the metals markets read the BRICS nations and the SGE desk, amongst other things, if you don't think that they're getting in ahead of their own actions to double and triple dip, so to speak, you're out of your mind. That's happening. Okay, but for those that really understand what's going on big picture, we talk about hedge funds, some of them, not all of them, banks, some of them, not all of them, and even retail investors, once again, a few of them, certainly not all of them, they are getting in ahead of the speculative run-up. Now, let's put ourselves in their mindset for a second. So they bought in at current levels, 18 bucks, 19 bucks, 17 bucks, that range. Let's say tomorrow there's a little bit of a dip. They didn't buy the very bottom. You cannot, in any way, shape, or form, quantify how absolutely infinitesimally minuscule the fucks they give are about that. Okay? $2, $3, 5%, 8%. Do they give a shit? No, of course not. They're in ahead of the next level. And the next level is, let's say, hypothetically speaking, and, we forecast this stuff to be inevitable, and we've been proven correct on it before. Let's say you get a move up to 1,400, 1,450. Do they give a rat's ass that they were $2 or $3 off the bottom in their purchase? Even if that means 10%? No, they don't. Nor should they. Nor should you. Okay, that's what it comes down to. They're using those ETFs as a way to, and I've heard somebody say this before. It looked a lot like me, sounded a lot like, oh shit, it was me. Convert paper into more paper into metals, guys, and that's what they're doing. It is a transference of wealth. All right, so for those of you that are long those positions at higher levels, at 25, 26, 28, okay. 23, 20, wherever you're in, and now you're looking and you're going, oh man, this sucks. I lost money on the trade. First of all, if you didn't sell it yet, it's not a loss. Okay. Second of all, it takes one catalyst event. That is the very thing to keep in mind with triple leverage. And again, please keep in mind, if you're the kind of person that's going to open your account and you're going to look, go, oh, holy shit, like that kind of thing, then my advice would be GDXJ. GDX, GLD, okay, single leverage stuff you can do the same thing, but it's just not as, I don't want to call it traumatic, but it's just not as dramatic, the movements on it. Those triple leverage, and USLV is another one on the silver side, guys. The movements in those ETFs are going to be wild. And I know it can be facetious about it sometimes, but please, please, like the slide in the beginning of all these videos say, like the page in Switch and Signal and Wirehouse say, guys, please, for God's sakes, keep in mind your own tolerance to risk, your own perception of the market, okay, your own longer-term, mid-term, and short-term investing goals. And please, I'm going to say this again. I've said this in about half a dozen other market videos, guys. If you are working with financial professionals, financial consultants, financial advisors, RIAs, whoever they may be, okay, and you read something in one of our publications, you watch one of these videos, and you get an idea, okay, and you have a question, ask them. If they have a question, tell them to contact us. We actually really enjoy what we do here, believe it or not. Info@evolutionconsulting.world. Guys, if we get an email from one of your financial advisors, or we get an email from a financial consultant saying, hey, you guys recommended this, why? Okay, we're going to explain it. We really enjoy this stuff, okay? Our average turnaround time on an email is about 20 minutes, okay, to respond. And we've had a gentleman emailed me recently, one of our Switch and Signal pages wasn't displaying correctly on his mobile device. You know what? We're going to fix it for him. This is what I do. This is what the whole dev team does, guys, okay? So the reason we share this information publicly, we understand there's a customer service component to it. There's a, there's a certain responsibility that comes along with what we do in sharing this information publicly, and we do it as much as the fact that it's a creative outlet. I personally enjoy doing these, and hopefully we're helping you guys make a fortune. Okay, or at least, or I should say, and have a better understanding as to why. Okay, so again, if you're a financial consultant, if you're a financial advisor, if you're an attorney, whoever, you're custodians of your account, whoever has a question that you work with, your entrusted financial professional, guys, tell them to email us. Okay, but in terms of those triple leveraged ETFs that are going on out there, the JNUGs and the NUGTs and the USLVs, guys. That what we saw today, okay? And I'm not going to say we forecasted it in Switch and Signal, though. We are going to put up a couple of told you so's a little later today because we got this week very right. We said hold on, it's going to be a wild one, and we pretty much forecasted Monday and Tuesday was going to be like, what the was that? Okay, and then we're going to see a little bit of stability. We're about maybe a day off. Okay, starting to see, the turn. We call today the turn day. It sounds a little bit like a poker term, but today was the turn. Okay, so that being said, guys, again, with those triple leverage ETFs, we're seeing a lot of the speculation ahead of the speculation. It's smart money getting in ahead of those that are going to start speculating as the FOMC gets closer. And by the way, not surprisingly, we don't forecast a rate hike again, and there is some major significance there. By the way, we're not going to hike rates. This is where it becomes laughable. Okay, I don't know how to put that any other way. This is where, we might hike rates, there could sort of be, there might be, there could sort of, we might, that kind of thing. This is the point where the market just says, fuck you, okay, and just doesn't care. This is the point where big banks and hedge funds just go, you know what, fuck you. And that's the irrelevance of the Fed. Okay, that's where it becomes laughable, becomes obvious that there's going to be no significant rate hike action, at least until after the election. They're not going to do that during an election cycle. It would make absolutely no sense. Even if it's a matter of putting on a dog and pony show, they're not going to screw with it that bad. So once this September rate hike's off the table, you might as well just, December, guys, as we forecasted. Okay, coming up on almost a freaking year ago at this point. That is going to be one of those major catalyst events that we were talking about. And you got the BOJ, once again, talking about going deeper into negative territory with the yields on some of their stuff. And they got their ETF buyback program going on. And the ECB is probably going to pull a do-over and go, oh, yeah, that's right. We were supposed to unload stimulus. So here you go. Have at it. So, again, exactly what we forecasted. Coming up now on 2 years with that, we call it the round-robin printing, round-robin easy money policy. Guys, it's happening. It's happening, and it's happening for a reason. It's because if they stop printing, it all comes crashing down. If they raise rates, it all comes crashing down. They're done. All right? And, with that in mind, people talk to me, they go, well, gold's down $10 today, or gold's down $8, gold down, is all your forecast information wrong? No. Okay? It's an inevitability, guys. It is an inevitability at this point, be that by design or be that by pure force of systemic nonlinear evolution in a system of economics. I don't care. But it's obvious what's going on, and it's obvious what's happening. And I'm here to help those who want to capitalize on it as opposed to complain about it do precisely that, though. Guys, with that said, again, questions, seriously, info at, somewhere over there, info at evolutionconsulting.world. Info at evolutionconsulting.world. And if you want to follow us on Twitter, it is at Evo_consultants, at Evo_consultants. All right, guys, once again, having a lot of fun making these. Again, I wanted to say a quick thank you to Dr. Janda, by the way. Dr. Janda had me on his program as a guest for a half hour last Sunday, and had, I will say very openly and very forwardly, I had more fun in a half-hour radio interview with him than I've had doing probably over 100 hours of so-called alt, so-called right news programs. So big salute, thumbs up to Dr. Janda. We're going to do it again November 9th, 3:30 to 4 o'clock, and be on there with some more metals trading, metals investing info, or whatever relevant stuff we got at that time from Evolution 4.0. That being said, guys, hope you like the new setup, by the way. You'll notice the desk is getting much larger here, and there's a reason for that. Is because we have to accommodate what we are going to be at least building here, and then ultimately moving to a building that's got T5 fiber drop. But we are getting ready to build Evolution Ultra here, so why would any sane person need 20 feet of running desk space coming up? There's your answer. We're getting ready to engineer the Ultra system, so we're starting to see the parts coming in now for that and everything. So we're excited, guys. As always, be good. Everything really is a transaction.